Our government is happy with the robust housing market. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because I've got some shocking news to discuss today. Apparently, our government is happy with our robust housing market, guys. Well, considering the amount of intervention they've done into the market, I can't imagine any of us are at all surprised. So they're pleased with the robust housing market. Let's have a look at this article from Mortgage Business to see their take on this. The government is pleased with the robust housing market. The federal government said it is pleased that higher confidence levels have led to strong housing market, but said that it's keeping a close eye on it. So it's higher confidence levels. It's got nothing to do with the insanely low cash rates with governments. If you combine federal and state handouts, getting up to 88 grand for people buying property. Yeah, nothing to do with that. No, it's just confidence, guys. We're confident. Assistant Treasurer Michael Zucker made the comments in response to questions from the media about whether the government is concerned by the Reserve Bank's warning last week that a rise in debt or an interest rate hike, which could see borrowers struggling to service their debt, could severely impact the financial system. In its Financial Stability Review for April 2021, released last week, the RBA warned lenders against increased risk-taking in the form of looser lending standards for individual loan assessments, while warning against increased risk-taking, even for optimistic borrowers. It warned that this could result in a deterioration in the quality of new lending and weaken the resilience of businesses and households, and in turn the financial system to future shocks. Responding to questions about the RBA's warning, Mr. Zucker noted that about a year ago, economists at major banks were suggesting that the value of house prices could plunge by 30%, while Master Builders Association and the HIA were warning that up to 500,000 jobs in the residential construction industry were in jeopardy. Now, this is the thing. I'm starting to think more and more that these were done for political attention and to nudge and motivate our politicians to push for this insane amount of government intervention and support for these industries. Housing is the pinata the government hits to stimulate the economy here in Australia. Guys, everyone's obsessed with housing. That's a given. HIA, it's a representative group of the housing industry, master builders. They lobby, these groups lobby. They're much better than the Institute of Architects, the RAIA. You know, can you tell? I get more useful information from the HIA than I do from the Institute of Architects. And I was spending thousands of dollars a year being a member, and then they bring in bloody gender quotas for committee positions. Yeah, that's what's important. You know, the fact that our profession is struggling when competing with project managers and other sectors. And yeah, we need gender quotas. Yeah, brilliant. Off topic, but I'm annoyed. Okay. We look at the state of the housing market today. We've actually got first home buyers at their highest levels for nearly 15 years, he said. If you're looking at the Housing Industry Association Affordability Index, which looks at house prices, they look at wages, they look at serviceability costs, with most notably interest rates. Well, yeah, that's all what's going to affect it, guys. On average, we're looking at affordability being at 20-year highs, which is why first-home buyers are at such high levels and why owner-occupiers are nearly 3/4 of the market. Well, affordability is only at that level because, I'll bring up my chart here, our cash rate is so low. It's nuts. I mean, money's so cheap, everyone. Supply of money is so cheap. So people borrowing it, jumping into housing. What else would you put money into in Australia, everyone? He said the dominance of owner-occupiers purchasing property, which he said comprised 3/4 of the market, was partly driven by over $220 billion saved by businesses and households during the pandemic. A lot of the $220 billion is now finding its way into people investing in housing. Again, one of the reasons why first home buyers are at such a high level. So there's multifaceted reasons for why the housing market is where it's at. But from our perspective, we're very pleased that confidence levels and the strength of the economy and the unemployment rate are leading to a strong housing market where first home buyers are at 15-year highs, where owner-occupiers are in a very dominant position in the housing market. Well, I can see the optics of that. People want a home. You want to have a house. You don't want to be renting. You don't want to be dealing with just all the rigmarole there. You just want a home. You want the stability. However, Mr. Sukkar said the government is keeping a very close eye on the market, adding that we want as many Australians as is possible to be able to purchase their first home if that's what they aspire to do. Recent figures from the ABS, but see, I mean, I agree. We want Australians in homes. We want people to have stability. We want people to have a good quality of life. But you don't want to be indebted for years to do it. You know, or maybe you know, there's the tinfoil hat, aluminium foil hat. Maybe that's what they want to do. Recent figures from the ABS showed that new loan commitments for owner-occupier housing dipped in February, 0.4% drop to 28.6 billion in seasonally adjusted terms for the first time since May 2020. Commitment levels remain significantly stronger compared with last year. New loan commitments for housing increased by 48.8% in February 2021 from February 2020, when owner-occupier housing increased by 55.2%. Other ABS data has shown that residential property prices rose 3% in the December 2020 quarter, with prices rising in every capital city. Recent analysis by Moody's Investor Services showed that affordability declined on average for 5 months to February 2021, despite the record low interest rates, and would continue to worsen throughout 2021 due to rising house prices and lower wages. I'm hoping, we looked at yesterday just the increased job adverts and shortages in certain industries. I'm hoping that will start to manifest in increases in wages. Maybe that's naive, everyone. I mean, here's the wage growth predictions from the RBA. But if we do have a shortage of workers, that should start driving up wages. According to Moody's data analysis, new buyers in Sydney require 31.3% of household income to meet loan repayments in February 2021, making it the least affordable city in Australia, followed by Melbourne at 27.1%, Adelaide at 20.1%, and Brisbane at 19.9%, and Perth 16.5%. The CoreLogic National Home Value Index increased by a further 2.8% at the end of March, placing values 5.6% above previous market peak in October 2017. So, our government are happy. They're pleased with the robust housing market. But we've got to remember, guys, the government have come to the rescue. This is not just due to confidence, due to people. Well, okay, actually, honestly, it probably is due to confidence, but that confidence has been, well, manipulated by our politicians, by the government intervening in the market. And they've done that by keeping zombie companies alive. You've got the trading while insolvent provisions. That's the thing, as a business owner, a small business owner, scares me the most. There's predictions we're going to start seeing 5,000 insolvencies over the next 12 months. You know, external administrations, insolvencies, we're about half of where we should be. JobKeeper, nearly 9% of Victorians were supported by JobKeeper, guys. 9%. They've been juicing the housing market for a long time. You've got the cash rate under 0.1%, everyone. 3% was the emergency rate. I was looking at all the articles discussing housing affordability and all these other things and predictions about the market. You know, housing would go to millions in Sydney. 3% was the emergency rate. You've had Home Builder, that's definitely juicing up the market, and we can see that with building approvals. First home buyer grants, up to 88 grand when you combine certain things. 5% government loan guarantees, negative gearing, that's a long-term issue. And super withdrawals, guaranteed people use that to get into housing, you know. You've got reduced housing supply due to council development, limiting development. You've got people advocating for limited development, the not in my backyard crowd. You've got mortgage holidays that has, well, ensured people haven't been forced to sell. And that's going to, in some regards, CommBank said they're not going to pressure anyone to sell until September. I don't believe it. I think there's already people who are getting the quiet tap on the shoulder, but they don't want a flood of property on the market. They don't want to see it fall to any significant degree. They don't want to cause a panic. And you've got uncertainty, and we can see that manifesting just in the savings rate growing here. So wages versus housing, everyone. I've shown this chart a few times the last few days. We can see wages have gone up 300%. where houses have gone up over 500 to 300%. Units the same. Pretty much all of them over 400% in that same time period. So wages and property are just not keeping up in this country. That's not a surprise to anyone. That's why I'm hoping what we're seeing in the jobs advertisements coming out will start to manifest in some increased wages there, some demand for workers. Maybe we'll see. Solutions. Long term, we need to get away from our property dependency as a nation. We've got that. It's ingrained in our culture. I honestly need to say, we don't need to get off our dependency. We need to change our culture. Is that even possible, guys? Do you think it's even possible for us to change the Aussie culture, the Aussie mindset of property being as good as gold, as going into property? I mean, everyone wants a quarter-acre block, or at least they did. You know, you want a yard. You want the kids to play, or do they still want that? I'm old-fashioned, guys. I'm an old millennial. I'm almost evolving into boomer mode. You know? I would advocate for creating special economic regions to experiment with reduced levels of government intervention, to try and free up the economy so we can compete on a global level. You want to incentivize businesses in Australia, and having a mountain of red tape and pain isn't going to incentivize businesses. Housing, I mean, you want to limit the state and local government involvement in it. You want to pull them out. You've got to watch the NIMBY crowd. They're not in my backyard crowd. Guys, people are having an impact. Council level is the one that has the biggest impact on housing. And, well, that's the episode. Thank you all for watching. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links you can find down below in the comments. For Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays or Teesprings. We've got some handmade pocket squares. You can support us using Gold Pass from the Perth Mint or via PayPal. Take care, everyone. Have a great day. I will see you all in the next episode. Bye for now.